to learn how to hire people who are smarter than you. Let them do the work that you used to do. That is how you create that bandwidth for you to learn something new and go one level up. First thing I tell them is don't read only about investing. If you only read about investing, you will not learn about the world. So you need to read very widely, read about history, read about geography, read about psychology, read about science. That is how you will connect the dots about how the whole world is connected. SIP is not a maximization strategy. It is a optimization strategy.
What qualities that brings you here, basically, where you are currently?
And I didn't know that the journey would bring me here. So, this is just a matter of chance.
Thank you, Chief, for your time, and it's a sort of honor to share a chair with you. When I started my career, I never thought that one day will come where I'll share a chair with a person who heads one of the largest, oldest mutual fund company in the country, and maybe one of the largest asset management company in the country. So I think surely
Delighted to be here, and it's advisors like you who have helped create this industry. So ये तो एक जुगलबंदी है which can hopefully create wonderful music for everybody here as well as for your investors.
So that's your greatness, because ultimately, again, the smart people are simple and they're humble also. So appreciate. In fact, if you look at genuinely, there are only 2-3 people in the industry. I started my career in '99. So maybe in the last 20-25 years, there are 3-4 people to whom basically you can listen, you can follow, and maybe you are one of them. So I really appreciate on that side. So the first question which comes in my mind is basically now, you recently took over as a MD and CEO. Earlier, erstwhile you were as a CIO. Is there any change happens in the way you as a CIO and now as a CEO? If you can maybe.
Absolutely. So first step of going from being CIO to CEO was to disconnect myself completely from investment. I'm not involved in investing at all. उसके लिए तो एक पूरा team है, almost 45 member research and fund management team across equity and fixed income. It's their job to worry about the market every day. I don't worry about the market every day. My job is to worry about, not worry, but to always see what am I doing, which is in the best interest of my 1.38 crore investors, which is in the best interest of my 1600 employees across the world, because that's the 1600 families who my actions have a impact on. And how do we make sure that business like ours, we are a regulated business, so making sure that we are on the right side of the law, making sure that we are giving our inputs to the regulator, following both in spirit and law whatever the regulator is saying. These are the things on which I put my focus. And many of my friends actually ask me this question, 25 years you were only doing investment, now suddenly you say you don't do. So I said, I have stepped out of investing. जो मेरे अंदर एक इन्वेस्टर है वो तो आज भी बैठा हुआ है, but that is not my role today, so I don't do it. And equally, I am only returning to my team the same trust that my bosses have put in me. Whether it was Kotak 2001, whether it was Invesco for 9 years, whether it was for the last 9 years at UTI, none of my CEOs ever came and asked me or told me what to do as CIO. So all that I am doing is returning that same privilege, that same respect that my CEOs gave me to my team. I cannot do differently from what I was given when I was in that chair. So I'm not involved in the investing. As I said, my concern is 1.4 crore investors and then the 1600 families who are part of UTI. Plus, we always think that हमारे ecosystem में there are 75,000 distributors, which means those families also have some connection to the actions that we take, and we need to think about their well-being as well.
I can see that at least post you are joining as a head of equity and then becoming CIO, we have seen the fund casing, the clear demarcation in terms of your R1, C1, that sort of process. I think that played out a good role for every fund manager. I think every fund manager knows exactly what they do and what they can't do basically.
करेक्ट. एंड वो फ्रेमवर्क का पर्पस क्या है? फ्रेमवर्क इज द सेम पर्पस दैट आई वाज डिस्क्राइबिंग टू यू, कि इवन द फंड मैनेजर्स कांट प्रेडिक्ट, but can we give them a framework based on which they can manage their behavior within that thing? This behavior gap is not unique to your investors. It is unique to your investors. It is sitting in your head. It is also sitting in my fund manager's head. So I have to find ways to address that behavior gap in their head. And the investment process, which at UTI we called score alpha on the equity side, and fixed income we call it the GIMS process. The reason why score alpha and GIMS exist is that वो उनका एक Google Maps है, कि when you are confused, refer to that. Don't become emotional. Don't try to do something in a hurry. So that is the reason why the investment process exists.
As you rightly said that you are the UTI comes with the legacy, almost like a 60 years of legacy. So what aspect of that legacy you would like to preserve, but at the same times we are in like 2026 is not the same at what we are in 1860. What are the new priorities for you as a head of the organizations, if you can spell out?
Sure. So, one of the things that I have learned in my career, so actually I would say I learned my values from my father, because my father was very clear in terms of black and white. But after I did my MBA, I always worried कि यार, okay, all this my father is talking about. I mean, he also worked in a large company, but I knew the challenges that he faced every day. And I always thought about it कि when you start working, how will I deal with these challenges? But I was very lucky because in 1992, I went to work for a company called Kotak Mahindra. And there were only 150 employees. So Uday was sitting there, I was sitting here. Literally, there were only 150 employees. So for the first time in life, I got to see how somebody can run a commercial enterprise but still be very clear about his values, because he was always focused on ki boss, I want to make a very big company 30 years from now, so there is only black and white. Why is this relevant to UTI? Because when I came to UTI, I saw the same thought process with Imtiaz, who was CEO before me, to say black, white, don't talk to me about what is gray in the middle. So I would say those are the institutional values that we will never lose. The other thing which is very important in UTI is हमारा जो mindset है, it is an institutional mindset. I am the custodian of UTI for 5 years because my shareholders and have voted for me. Exchange disclosure है, you are appointed CEO for 5 years. I think of my role as the custodian of UTI for 5 years. The actions that I take, I am not looking कि उसका fruit अगले 1 साल में होगा या 2 साल में होगा. It will produce fruit sometime 10 years from now. So think long term. But you also said about what needs to change. So I want to preserve the long term orientation. I want to preserve the values. लेकिन जब कोई institution 60 साल की एज हो जाती है तो थोड़ा बहुत एक paralysis हो जाता है. There is a bureaucracy. So one of the things that I'm glad people like Umang are pushing us is to say, how do we make the organization more agile? We don't want to lose our long-term thought process, but we must become more agile. We must learn to become more innovative, because if we want to be relevant to you and to our investors, you need to be agile, you need to be innovative. So I would like to grow these two qualities while retaining the first two qualities that I talked about.
I think that is visible in terms of the team, like what Absolutely. It was there maybe 10 years back, what is there today. I think there is a sea change is there in Correct. The UTI, and maybe you are there in that period. So one thing I think so if you look at your 30 years of career, maybe started maybe research to fund manager to head of equity to CIO to CEO. Now all those things changes, right? And how do you adapt to that? Is there any something guidelines or something maybe your experience which you can maybe pass it on? If someone moves up the ladder, what he or she has to change, do something so that they can manage those roles far better.
So, great question. Let me answer it like this. One thing is to say that you must always have a learning mindset. Even today, I think of myself as a student only. I am also still learning. So it is very important to have a learning mindset. But as part of the learning mindset, there is one very important principle. See, if you want to learn something new, you have to remove something from the brain.
To unlearn something.
You have to unlearn something. So this is the most important thing that you need to keep in life, that while you want to have a learning mindset, to learn something new, you must first stop doing something else. That is how you create the bandwidth to learn something new. The second thing, and I say this more in the context of my career, because as you said, I've gone through various levels. You have to learn how to hire people who are smarter than you. Let them do the work that you used to do. That is how you create that bandwidth for you to learn something new and go one level above, right? So I would just say these are the two critical things. One, learning mindset. Part of the learning mindset is unlearning. And second, figure out who are the smart people who can do something better than you. Get them to work for you, get them to execute the stuff, and then you take on a new challenge about that. That is how I have organized my entire career.
So I personally feel that listen carefully. These are like gold standard words. Comes with 30-35 years of experience, giving you in maybe 30 minutes. All of your privilege comes directly from the horse's mouth. I personally regard him far better whenever he speaks. Like not only me, but the market listens to him very carefully, and I think these are very extremely important things. Uh, as you are a good leader, you read a lot, you think like. So how this thought process get developed? Does it has helped you by reading books, or having some philosophy, or some thinker would have influenced you? Like if you can give some sort of color on that.
So I would say it's a combination of things. It's not just one thing. Of course, I've always loved reading. That's a habit my mother inculcated in me very early. So I always enjoyed reading, and I've always enjoyed reading wide range of subjects. So actually, whenever I meet lots of young people who want to become analysts and fund managers, and they say what to read, first thing I tell them is don't read only about investing. If you only read about investing, you will not learn about the world. So you need to read very widely, read about history, read about geography, read about psychology, read about science. That is how you will connect the dots about how the whole world is connected. So certainly I would say, reading very widely is part of that. The other thing that I have found very useful in my career is, and I consider myself very blessed. I've had some wonderful mentors over the years, and the beauty of having a mentor is that they are able to see what you are doing, and they are able to sometimes give you that guidance which helps you think through something that maybe you have not figured out how to deal with. And so I've had a wonderful set of mentors over my entire career. And when I say mentors, these are the good people from whom I've learned. I've also had some bosses where I would say I learned how not to be like them. So it's a combination of things, but I think having a good mentor is something I would urge each and every person who's looking to have a career, that you should have a mentor. And that mentor need not be your direct boss where you are working. Sometimes that mentor can be somebody who's in a completely different field. But it's the ability to engage in a conversation about what you are seeing, what you are experiencing, and how you can tackle it, which really makes the difference in your career. So I would say reading and having a mentor to whom you can talk to, relate to, I think that makes all the difference in life.
So coming back to maybe on the economy side, there are a lot of uncertainties is there, a lot of inertia, or maybe the geopolitics are there. So how are you reading it, basically whole event, and what sort of advice you would like to give in terms of how we can look at the 3-year, 5-year perspective as an investment, to at least to start?
Sure. So let me give you one piece of what you might consider good news and bad news. But if you have hopefully learned anything from me in the last 1 hour, it should be that every crisis, you have to just convert it into an opportunity, correct? So I think one of the things that I must admit, that to my mind, this has now completely changed. See, I was very fortunate, very privileged, very lucky. I went to business school in 1990. I passed out in 1992. I had no clue what was happening. I mean, I knew what was happening in the world because I was reading newspapers and magazines and all of that, but I didn't realize how significant those events were going to be in shaping my journey. Right? What are those two events? Those two events are effectively the fall of the Berlin Wall, the end of the Cold War, 1989-1990, and India's foreign exchange crisis in 1991, which then led to liberalization in 1991. That's the same coin: crisis, opportunity. These two things completely changed my life, because what happened is the private sector started to grow in India. The corporate sector opened up dramatically. We went through a period in the world where there were open borders for trade, there were open borders for the flow of capital. I would say even there were open borders up to a limited level for the flow of skilled labor across the world. So we have enjoyed a 20-25 year period of globalization, which has benefited the educated class across the world, not just in India, very significant, has benefited us very significantly. And that 91 generation benefited from what happened, particularly in India. But with the benefit of hindsight, Anup, I think something started to change in this equation. Maybe you can say GFC, or maybe sometime after the GFC. This whole model of the world is actually now coming undone. The tenor of conversations across the world is no more globalization. It is not about free trade. It is about, every country uses different words. US says tariffs. I want national champions. India says Atmanirbhar. Korea calls it something else. Europe calls it something else. But the world has gone from open borders to starting to look a lot more inward. Politics has gone from being more liberal to becoming more conservative. So I think the world is going through some kind of a pendulum shift, right? Maybe the world is not one unidirectional wave. It is more like the pendulum in a clock. It went to this extreme. Unfortunately, right now it is moving in back in the other extreme. So I think in that context, the world is a slightly different place. But, and this is very important, it means that you may see more and more geopolitical shocks. But my experience of when I started my career in the 1990s is those geopolitical shocks can actually convert into opportunities for investors who are willing to take advantage of them. So I would submit, expect a lot more volatility in the next decade as compared to what you saw, I would say, in the period of the early 2000s to 2015. But that volatility may end up creating more opportunities for investors. So that's the mindset with which we should approach it. Geopolitical shocks are now the nature of the world in which we live. You can hope for a different world, but you have to live in the world that you have. You can't live in the world that you hope for.
What we should not do in such volatile world so that we survive?
So those 5 points that I put up there: asset allocation, diversification, thinking long term, not borrowing. I think these to my mind are really the mantras. B, when you start to think about it in terms of the valuations and those geopolitical shocks, if you're able to use those valuation cycles to your advantage, it can actually enhance your returns. So you have to now look at the shocks as opportunities rather than ki arey ye kyun hua. I think that to my mind is the reality of the environment that we will have to operate in. I think the really thing that I still feel very happy about is that I have not seen India's macroeconomic fundamentals in the kind of health that we are seeing today. So I think that gives me a lot of comfort that we have learnt our lessons over the last 20-30 years. We are maintaining our macroeconomics at a very strong plane. And when you do that, as a country, you will be able to benefit from the opportunities that come along your way. So to my mind, this hard-won macroeconomic stability that we have built for ourselves is something that we should take great pride in, because this is not true across the world. You look at the developed world, they have actually compromised their macroeconomic stability, whether it is the US, whether it is Europe, you look at China, you look at Japan, each of them have significantly compromised their macroeconomic stability. In India's case, the focus on fiscal discipline, reducing debt to GDP, the benefit of having a young population, this is giving us an advantage that many other countries don't have. You can't eat relative returns, which is why I'm careful about, using these as an argument to say, yahan pe hamesha acha hoga. We will have to bear the shocks that happen internally and externally, but you are sitting on a strong foundation, and that becomes very, very beneficial, and we should all consider ourselves privileged that we are sitting on this foundation.
Maybe in such volatile environment, your SIP remains your the best friend.
Absolutely. See, I used to tell people ki, what is the SIP? If there is a fire in this hall, so what will everybody here do? Fight or flee. You can't fight the fire, so you will flee. So you will have to run. When you run out of this hall, because the alarm will go off, you will see one person running into the building, or many people with helmets and pipes and all of that. Who are they? Your SIP is like the fireman, right? When that crisis happens, when that fire is there, when everybody else is running out of the building, that SIP, like a blind, stupid, boring process, it makes sure that your money gets invested when the fire is there and everything is cheaper. So that SIP, according to me, is one of the simplest inventions created by financial planners to ensure that you get the benefit of that crisis and convert it into an opportunity. The one thing that I want to say, and इसके लिए मैं मानता हूँ कि all of us in the industry are also responsible. SIP is not a maximization strategy. It is a optimization strategy. लेकिन जो लाइफ में मैक्सिमाइज करने के लिए जाते हैं ना, उनकी स्टोरी या तो आपको हिस्ट्री बुक्स में मिलेगी एज फेलियर्स, and some of them will obviously appear as successes. But history always remembers only the successes. It doesn't remember the failures which have happened. So that is the important thing to remember. And ये इन्वेस्टिंग का जो फील्ड है ना, आजकल बॉलीवुड में शायद उतने सारे मूवी में ये दिखाते नहीं है, बट आई रिमेंबर 30 years ago इन एनी गुड बॉलीवुड मूवी, एक बंदा या एक लड़की वो ट्रेन से वीटी में निकलेंगे, तो दे विल बी इन ट्रेन, एंड उनका ड्रीम क्या है कि आई विल ऑल्सो बिकम अ बॉलीवुड स्टार, कि आई विल बिकम द नेक्स्ट अमिताभ बच्चन, द नेक्स्ट राजेश खन्ना. सो एवरीबडी हु कम्स ऑफ दैट ट्रेन इन वीटी, वो एक मूवी में दिखाते हैं कि दैट इज देयर ड्रीम और व्हाई दे कम टू बॉम्बे. आजकल मैं देखता हूँ कि बॉम्बे में सबका एक ही ड्रीम है कि आई विल बिकम द नेक्स्ट राकेश झुनझुनवाला, आई विल बिकम द नेक्स्ट रमेश दमानी. देखिए, दे आर द सक्सेस स्टोरीज. आपका सिर्फ आपको या तो राकेश झुनझुनवाला या रमेश दमानी नहीं बनाने वाली है. All we are trying to do is give you a comfortable and a secure life where you will have financial security. So set your mind to that. It is optimizing for your goals. It is not going to convert you into Rakesh ji. Rakesh ji तो अलग थे, लेकिन वो एक सक्सेस स्टोरी थे. उनके पीछे कभी ऑफिस में आ जाइए, आई कैन टेल यू अबाउट द 100 इन्वेस्टर्स हु वांटेड टू बी राकेश जी बट फेल्ड, एंड उनके स्टोरीज तो आपको पढ़ने के लिए मिलेंगे भी नहीं.
डाइग्रेसिंग फ्रॉम द करंट टॉपिक, बट जब आपने अंडर ग्रेजुएट चालू किया था तो आपको लगा था कि यू विल रीच दिस स्टेज, और अगर थे तो व्हाट क्वालिटीज दैट ब्रिंग्स यू हियर बेसिकली वेयर यू आर करंटली?
No, I mean, I didn't know that the journey would bring me here. So, this is just a matter of chance. बट जैसे कि मैं बोलता हूँ, लाइफ में एक डोर बंद होता है तो और कहीं पे एक डोर या विंडो खुल जाती है. सो यू हैव टू कीप लुकिंग फॉर दैट. एंड द वन थिंग दैट आई वांट टू से इज देयरफॉर इट्स वेरी इंपॉर्टेंट टू बी रेजिलिएंट. इट इज वेरी इंपॉर्टेंट टू परसिवियर. इफ आई हैव मैनेज्ड टू गेट वेयर आई एम, it is because at every stage of my life I have had people who have surrounded me, who have given me support, who have been there with me through a difficult time. And just on a personal note, I was talking about crisis and opportunity. See, in my own career, I have experienced this twice in very different ways. When 2000, 2001, you would have seen over there, I talked about the dot-com collapse. I was on the wrong side of that crisis. I was an entrepreneur who was trying to set up a dot-com company. By the way, the company is still around, very successful. Now it's called Mire Sher Khan. But I was one of the founders of the company at that point of time. We called it Sher Khan SSKI Investor Services. But we were on the wrong side of that crisis. We were the people who were running that business. The business collapsed when the dot-com thing happened. The financials went very adverse. I lost my job at that point of time. But I got through that because my wife said, okay, if you are going to lose your job, then she's my batchmate from college. So she said, then I will go back to work. So I survived that period because she went back to work. We had a young child at home, but she went back to work as a consultant. So we got through that 6-8 months. Then again, I settled down on my feet. So all I am saying is that when crisis happens, you actually have no control. कि आप राइट साइड पे रहेंगे कि रॉन्ग साइड पे रहेंगे बट एट दैट टाइम इट इज योर फैमिली it is your friends, they are the ones who support you, they are the ones who give you that ability, along with the mentors that I described. So 2001, it was one of my mentors who sort of helped me figure out, okay, what do you want to do, how can you go ahead, and he helped literally guide me to an opportunity, which is where I took the job and then got out of it. So my simple point in all of this is that life can't be planned. You will have shocks that hit you at different points of time. Sometimes it will hurt you. When that crisis happened, that blood is not somebody else's, वो आपका ही blood है. So then it's a question of, do you have friends and family, mentors who will come to your rescue? And just to give you an example on the opposite side, when the global financial crisis happened in 2008, I was on the other side of it. Because there was a mutual fund company which collapsed and they needed a buyer who had the liquidity overnight to come in and save the company. हमारी गुड लक थी कि दैट डे वी वर द पर्सन ऑन द अदर साइड एंड वी बॉट दैट कंपनी बाय देम पेइंग अस मनी टू बाय इट एंड वी स्टार्टेड बिटवीन अ फ्राइडे इवनिंग एंड अ मंडे मॉर्निंग वी बिकेम द न्यू ओनर्स ऑफ दैट म्यूचुअल फंड. सो इट वाज अ बर्थ इन विच somebody's crisis became our opportunity. So I always say in my career, my first crisis, I was the victim. The second time somebody else got hurt, I benefited from it. So you're not in control. But friends, family, mentors, if you don't have them, you will not be able to go through any crisis in life.
But even if you have all those things, there could be some personal trait, I think, if you think back.
Resilience is the most important thing. जैसे कि you have to approach life as a marathon. You are not trying to run the fastest 100 meters. आपका रेस जो है 40 years का रेस है, 50 years का रेस है. Marathon is 42 kilometers. You want to keep running. So you have to have that desire to persevere and the resilience to keep going.
So if now the AI is another, things are happening. So how do you look at that, and how can you able to decode on a good side, bad side, both the things?
See, every technology will always have a good side and a bad side. We have seen this, I have seen this in my own career and journey. Every new technology, somebody benefits, somebody loses. All I will say is that this is a little bit of a scary one. I'm not going to say this AI is not scary, and I'll tell you why. I mentioned this when I talked about my own journey and what benefited me the most. See, I grew up in an era where when my parents said, get an education, it will benefit you, it worked. Now when I look at AI, even I am questioning कि boss, education तो ठीक है, but if this AI is going to do everything, then what the hell do I do with that education? But having said that, I am still very optimistic that the future is not about humans versus AI. It is who will be able to make better use of AI to make himself productive, and who fails to use AI to make himself or herself more productive. So we eventually have to think of AI not just as a tool, because it is more than a tool, but can you make it your best friend who is not visible to anybody else, but is making you smarter, more efficient, more productive, and better at what you do. I think if you can use AI in that sense, and that is what all of us are trying to do in our business and our companies today, then I'm not so worried. But some jobs will vanish and some new jobs will happen. That is a fact of life.
What is one underrated skills when you look at long-term career in the capital market, whether as an investor or as a fund manager? What is that couple of underrated skills you identify?
You mean particularly as a
In a capital, if someone wants to build a career or as an investor or as a fund manager, what is that underrated skills you identify?
So I would say one is certainly that resilience factor. I would certainly point to that. Um, the other second one is actually I've written about this elsewhere before, uh, which is that I think of myself as a student and I think of the stock market as a teacher. It is the only teacher to whom I have paid tuition fees more than once to learn the same lesson. ठीक है, एक बार गलती हो गई, I paid tuition fees again to learn the same lesson. But in the stock market, you cannot do that for very long. If you keep repeating those mistakes and you don't learn from the mistake, then the stock market is a very dangerous place for you. So I have always found that as an investor, you need to have a diligence of, at least for me it worked, of writing down what your thoughts are, what has worked, what has not worked, acknowledging the mistakes that you made and learning from them. Because if you keep repeating the mistakes and you keep paying tuition fees back to the market, then eventually there is nothing left for you on the table as a fund manager to say that, hey, I created something of value which is helping my investor reach their goals. So to my mind, that is most important. Learn from your mistakes and don't pay tuition fees again and again to commit the same mistake. You have to learn from your mistakes.
One more area which you also touched upon, which is diversification. And what I see recently when I go and look at the client's portfolio, I think they have literally taken a meaning of diversification in a wrong way. What I mean that is basically now people have in their portfolio flexi cap, multi cap, large and mid cap, small cap, mid cap, large cap, everything. तो पूरा बाजार खरीद लिया है sort of. Now, is it too much diversification? And if it is, then what is your reaction on that basically?
See, I chose a very easy job in life because as a fund manager, this job is very different, by the way, as CEO. But so far as a fund manager and CIO, I used to always tell people, my job is very simple. क्योंकि मैं जो भी करता हूँ ना, the stocks don't talk back to me. Right? But you all are in a very difficult job because you all talk to clients and clients talk back to you. So which is why I never became a wealth manager. I was very happy as a fund manager. Now as a CEO, my challenge is my job is only talking to people. So now I'm having to deal with the fact that they talk back to me a lot. But just in that context, therefore, that really becomes the challenge. If investors want to keep doing multiple things, how do you sort of tighten them to say, boss, once you end up owning 30, 40, 50 mutual fund schemes, aapne to pura bazaar kharid liya hai. Then your returns also cannot be different from what the bazaar is giving you.
Always less than bazaar.
Yeah, so I mean, I'm sure you all don't recommend to people to have 30 and 50 schemes, correct?
Not at all.
Yeah. So this is that thing where people become envious of what the neighbor is doing. Arey, wo mera jo neighbor hai, there is nothing worse than seeing your neighbor make money. People lose their brains when they see their neighbor making money because they feel, arey, wo kyun paisa kama raha hai? I am smarter than him. I am better than him. I should be able to make money. And then they want to do things because he is doing something. फिर आप कहीं शाम को एक शाम की महफिल में चले गए, you meet somebody there, he's making money doing something else, then you feel, "Arey, I should also be doing that." So you eventually end up borrowing ideas from everybody, and your portfolio looks like what you described, 30, 40, 50 mutual fund portfolios. To cut a long story short, it doesn't make any sense. I can't give you advice on how to deal with it because I've never had to deal with clients and give that advice, but I completely agree with you. That is not desirable. You have to keep your investment universe tight. The only thing that I would give you about diversification, people's understanding of diversification and my understanding is slightly different. My understanding of diversification comes from something that I read from a gentleman who's both academic and practitioner, Peter Bernstein. And he used to always say that if you are comfortable with everything that you own, if you are comfortable with everything that you are own, then you are not truly diversified. Right? So that is the only thing to remember, that you must have something which is making you uncomfortable in that portfolio, because that might be the crisis which is also the opportunity, and therefore there has to be something which is uncomfortable in your portfolio.
There is no concept called perfect portfolio, right?
Exactly.
One third of the portfolio should underperform, and then only that
Exactly.
the complementary of your building as a diversification portfolio
Perfect.
comes.
Perfect.
Interesting. Thank you. So, is there any framework to avoid wrong decisions with your experience?
So I have found in my career and in my life, simplest way to avoid wrong decisions is don't take the decision. नहीं, in a lighter vein, eventually decision तो लेना ही पड़ेगा.
Not taking
But
decision
I-
is also decision.
That is also true. But the simplest way I have found of reducing my emotional decision making is think through everything, discuss everything. But finally, for very difficult decisions, I have always followed a simple principle. Ki let me sleep on it tonight, and tomorrow morning let me see what I feel about it. And by postponing 99% of my decisions to tomorrow morning, which could include something that I am fighting with my wife, or many years earlier with my father, or with my mother or my sister, that simple thing of saying it doesn't have to be decided today. Sleep on it and see what you think about it tomorrow. A lot of those wrong decisions, to my mind, got resolved just by that habit. That desire to close it now sometimes is the bad habit.
200% agree with you. It has worked even for me. Sometimes you have to just validate the thoughts. I think this makes a lot of this thing says. Is there any formula to make outsized return in direct stocks? Is there any investment philosophy or anything, framework?
See, the challenge in making outsized returns in individual stocks is very, very different, because that requires you to sacrifice the principle of diversification, right? I spoke about diversification and why that is important, to give you that 12-13% return जिसके आपके financial goals achieve होंगे. Everybody starts by saying मुझे राकेश झुनझुनवाला बनना है. But what you forget is that the exceptional quality of Rakesh Jhunjhunwala was not that he bought only great companies. Actually, if you see his history, I can tell you the hundreds of companies that he bought were a disaster. But eventually, those 3, 4, 5 gems that he bought, they became 80% of his net worth. And because he could just sit and never sell them, he actually behaved more like an owner of the business rather than like an investor. So people say Rakesh Jhunjhunwala investor. I say no, he behaved like a business owner. He never woke up in the morning saying, "Arey, Titan has becomes 50% of my portfolio, chalo bech deta hu." He said, "I'm happy owning it, I'll continue owning it." So this is the challenge. If you are looking to invest to secure your financial future, then I'm sorry, you have to practice diversification. If you practice diversification, it will take away those supersized returns that you see. The supersized returns that you see in Rakesh Bhai's portfolio is because he held and held and held few of these companies like Titan, Crisil, Tata Motors, Federal Bank. He just held and they allowed him to get that. But as a result, his portfolio is completely undiversified. अभी तो क्या हो गया, he's got 2-3 private equity investments which also got listed. तो अभी his portfolio is again looking slightly more diversified, but I would still say the top 10 investments in his portfolio today, he's of course no longer there, but I'm referring to rare enterprises. Those top 10 investments must be 90% of the net worth. But how many of us can sleep well at night knowing that 90% of the net worth is in 9 stocks? So that is not meant for many of us. If you have his emotional capability of tolerating the volatility when 90% of your net worth is 9 stocks, yeah, then don't practice diversification. That is the secret of concentration and great wealth. But that concentration comes not by starting with 10 companies. He started with 150 companies. But those 9-10 winners that he just held and held and held, they ended up becoming 90% of his portfolio. So these two roads are very different. You have to decide which road, and which road is a function of what is your objective. And all I can say is the road to financial security, many people can go down that road. This road in which you become a super investor like him, उस पे तो बहुत कम लोग destination पहुंचते हैं.
So let me ask this question not to you as an CEO of the company, but you as an investment professional or आपका जो inside का investor है उससे, you know, like if in current market situation, where do you see money making opportunity, market cap wise or a sector cap wise, anywhere you think there is a risk reward ratio favors?
Sure. So, I mean, as I said, my investment views are now the views of my team. But I think this we've been articulating publicly for a while. We are still of the opinion that from a margin of safety point of view, the large caps is where we have a lot more comfort. We still have very limited comfort in small caps. And I'm talking as an allocator. So I'm talking as an allocator. Should I prefer large cap funds, mid cap funds, small cap funds? I'm saying I prefer funds which have a large cap bias. They need not be large cap funds. It could be flexi cap. It could be a large and mid cap. But that's where my bias is. I am still not comfortable with the small cap and the mid cap funds. But I know my own fund managers who are manning some of these strategies. They are telling me that, sir, abhi we are finding one or two companies that we find attractive. But finding a company attractive is different from a top-down allocation decision ki this is attractive. I still don't find the small caps and the mid caps very attractive at this point of time. And from a sectoral point of view, my view for the longest time, for last 2 years, maybe little more than a year, I've been saying this, the sector where I have maximum comfort in terms of the risk reward equation, matlab risk bhi hai but reward bhi hai, is the larger banking and financial services area. I think valuations are comfortable. The growth opportunity is very clear. That is where I would have the maximum level of comfort. Very deep value, very contrarian. Perhaps today may be the IT sector. But again, you have to be a little bit of a bazigar to be willing to sort of look at it today. But I am a student of valuations. And the valuations are giving me a very simple signal that today there is great margin of safety in IT. What will happen, how it will happen, I already told you, I am not in the business of predicting. I am in the business of, is the probability in my favor? Probability is in my favor, so I am happy.
So if someone wants to become a bazigar, but let's say suppose if you want to do a staggered investment in that space, will that be advisable?
I think so. Because the margin of safety and probability is in your favor today. Again, don't put 100% of your portfolio there, you are safe.
Let's say suppose somebody who is in maybe 55, 60 age, what would be your advice? Do you think one should have more allocation towards equity considering where we are, or you think one should have a moderate equity allocation considering the age profile?
No, you need to have significant equity. I mean, let me not use the word significant because everybody's financial position, station may be different. 3 years back, I had gone for my friend's father-in-law's birthday. He lives in Ghatkopar. Actually, now he's relocated to Powai, so he's 93. So I was 53 at that point of time. So I went, I wished him, hello uncle, happy birthday. So he said, very good. I said, you've had such a wonderful life for 93 years. So he said, ha beta, very fulfilling life, etc. Then he looked at me and said, what is your plan for the next 40 years? I was like, okay. Then I looked at him. He is 93, I am 53. So this is a very valid question, right? What is your plan for the next 40 years? So my simple point is actually, I don't think there is anybody who can afford to not have equity in their portfolio. Because the minute you think about this as your life expectancy being another 20 years, 30 years and 40 years, you cannot manage that kind of a time period without having equity in your portfolio.
You can afford.
And just one quick final thing on that. We've spoken today a lot about SIP. I think HWP is greatly underrated. As you move into a period of capital withdrawal as opposed to capital accumulation, HWP is a great way for you to withdraw your capital for your living requirements, but allowing it to compound with some level of equity. I don't want to be prescriptive. Whether that equity is 20, 40, 60, that is up to you. Each person may have a different number, but I would submit, even if you are 50 or 60, you will need equity in your portfolio, because what if you live to be 93? More and more people in the circles that we are living to be 90, and more people are reaching a level of financial security in life where they are not just concerned with capital withdrawal. They are saying, I have a corpus that I want to hand over to the next generation. Then why will you stop the compounding which happens in equity? So we are increasingly dealing with a very different cohort of investors, where it is not just about capital withdrawal, it is about intergenerational wealth transfer. You will need equity for that. How can you not have equity? What number we can decide, but I think the SWP is a great way to meet somebody's living requirements from capital accumulation that they did during their productive phases of their life. Even for my mother, I run SWP. Why you are worried? You withdraw the money. Kabhi niche hoga, kabhi upar hoga. It will do the reverse of SWP. When market is up, you will withdraw less units. When market is down, you will withdraw more, but doesn't matter. It's solving your purpose.
Where your personal money is going within the UTI schemes, apart from the SEBI regulated, what SEBI mandates you to put?
Across the board. So actually most
maybe
of...
which fund manager maybe you would like to give whenever you have a surplus money within the UTI?
So actually recently I have invested everywhere. I think in the FlexiCap, in the Quant Fund. I also actually put some of my money into index funds. I'm not sure whether my kids will ever get involved in the market, at least the older one. So I have told her also, it's in index funds. You may be a sociology student, you may never understand anything about markets. You may still develop the inclination, but it doesn't matter. It's lying in the index. As long as India is doing well, the money will compound. So you don't bother about it. So to my mind, the simplicity of the index fund is the simplicity. ज़्यादा सोचने का नहीं. The index is doing the managing of the 50 best companies for you. Whether you understand the market, don't understand the market, don't worry. Compounding will happen. You focus on your career, your job, and for compounding the income that you are able to earn from your job. Market will do the heavy work for you. So I invest in a combination of all of these funds. As I said, recently it's been more FlexiCap, Quant, and index.
So you answered though that question in terms of your daughters. If let's say suppose if she's working, and probably look at the index fund, is there any active funds for her perspective you think that you will ask her to allocate there, considering her age and maybe considering the next decade also? So
normally wherever I do this for anybody, like my physical training teacher, he's also invested. My driver, he's been working with me for 16 years, so he's also invested. So for most of them, what I do, it's typically normally it is either the aggressive hybrid fund, because it's a 65-35 ratio, so thoda asset allocation also takes gets taken care of. So for most people, I suggest that aggressive hybrid. For people like my daughter, if I do, then I don't do aggressive hybrid. Then it's normally either a flexi cap or a multi cap scheme. Because they own the whole market, portfolio is diversified. Let the fund manager figure out ki large cap karna hai, mid cap karna hai. Leave it to them. Why you want to do mata pachi about where to put that money? So I would say flexi cap, multi cap. But my number one recommendation to many of these people normally has been aggressive hybrid, because automatically asset allocation is taken care of. So they will never feel the full volatility of equity.
I agree on that side basically. What would be your advice to us as a wealth manager, the custodian of wealth? What we should not do for the next decade so that we survive, but at the same time we see a prosperous India and we get benefit from that?
I think the magic mantra in our business is we are a fiduciary business. And in any fiduciary business, it is very important to remember that eventually client ki bhalai mein apni bhalai hai. I think as long as you are operating as a wealth manager, financial advisor, fund manager, whether you're the CEO, you're the analyst, you have to keep in mind कि एक आदमी है, एक औरत है जिसका कोई financial aspiration है, उनका कोई goal है. We are the people with the product knowledge, with the technical skills, who are trying to get them to that destination. So I think it is important to remember that. It is like a doctor. I would still say, I know people now criticize doctors as well, but I would say eventually their interest is in the well-being of the patient. We as advisors and managers need to think that same thing. If you always keep the investor as that central entity in your decision making, I think then you will be able to manage 30 years, 40 years, 50 years. That's just one additional thing I will say over here. And this is coming more from a regulation point of view, so everybody needs to be aware of this. I think across the world, including in India, there is a greater emphasis on three things: risk profiling, conduct meaning conduct of that wealth manager, fund manager, whoever it might be, and actually risk profiling and suitability, because these two are looking outside towards the investor. Are you profiling correctly? Are you giving them something which is suitable for them? Then the mirror is turning back at you and saying conduct. So I think these three things are going to become more and more important. Every country around the world, when I see, is at a different stage of journey. But if you remember suitability and conduct, I think then those are the two founding principles for any business which is trying to do good for the investor.
So I have a lot of question in mind, but like the paucity of the time, and maybe we have another event, and I took his time on a Saturday, which obviously the chief has to take permission from the home minister to make sure that he's there on that side. So again, if you look at what he's trying to
see, in all these things, it's a function of partnership.
Yeah.
So I was very lucky. Before I could broach the subject that I need to go to Goregaon, Oshivara Saturday evening, she had already asked me that I need you to come Saturday morning, even though she knew I was coming back at midnight, to Fort for some event she was doing. So 10 o'clock to 1:30 I was there. So that's partnership, right? She called me there and I said, okay, now I'm going here.
So what again I can see, look at this stage, at this stature where it doesn't require, he came midnight yesterday and today also he's there with us. When I sent him message, like maybe he just took, maybe he could have went through his schedules and then he just confirmed that we can do that. So again, one common thing, what I can see, great people are, they are simple, they are humble. Thought process are clear, like maybe it's a coincidence that my presentation title is also the same, that you can't predict but you can prepare. He was also directing us in the same way that let's watch, please do not predict anything else, make sure that you prepare and so that you evaluate. So it's a really great pleasure, Chief. I think it's an honor to be
Thank
here
you so
and
much.
We are hosting you. Thank you very much for your time.
Thank you so much. Thank you.